The anticipated rate hike is here, and investors are selling the Aussie buck. The new RBA cash rate jumped another 50 basis points this month and beat expectations by 25. Today's hike could have already been priced in as investors are expecting a higher rate, but taking a look at the 4-hour time frame for pound Aussie, the pair is coming off a resistance level in the 1.74s. The pair shot up after the hike, but it still looks bearish for a couple reasons. Even though the pair jumped, it still couldn't break above that previous top. Price also formed lower lows and highs on this time frame, suggesting weak upside potential. If the pair sells off, price could move to that target zone in the 1.728s. In other news, oil prices rebounded after touching on support once again in the 117s. On the 4-hour time frame, price looks like it could come up to the 121s before seeing any kind of resistance. So oil bulls may start taking profits if price reaches this level. The Edgefinder is now giving the commodity a +4 buy rating. Its strongest metrics mostly involve technical indicators like the trend reading, and the seasonality shows that oil has historically performed the best during the month of June. This week only, you can get a copy of the Edgefinder for 40% off using code A1YT. Check out the link in the description for more details. Lastly, the stock market sank in pre-market as Tesla pauses hiring for now as Elon Musk evokes concern in the US economy as well as stocks. Since the open, however, price has rejected the lows of the day and is starting to form a bullish hammer candle on the 1-day time frame. On the 4-hour time frame, the S&P shows a hard green candle at the start of the day. If momentum continues, we could see price test resistance in the 4100s. Right now, heavy volatility and wild price swings suggest that this market is mostly good for quick trades because the index is still in a downtrend overall. In our last video, 𝘀𝘂𝗯𝗀𝗰𝗍𝗀, Brandon Brackett, and Cyril Deroux commented on some pairs they want to see in upcoming videos. Be sure to comment your pairs down below and we'll make sure to take these into consideration for future videos. For more daily reports, remember to subscribe down below.
SPX, I think, is an interesting position, right? We've actually had a quite an interesting 4-hour close here. There's two scenarios for me, right? Obviously, for my hey Donny, for my risk sentiment, I always use the SPX500 to determine whether it is risk on or risk off, i.e. for all the newer people out there watching the stream, risk on, everything is hunky-dory, it's moving up, market's moving up. Investors are confident. You're looking at buying those commodity currencies, the Aussie, the CAD, and the Kiwi, or N, sorry. Risk off, looking at buying the yen, the Swiss, and recently, post-COVID, the US dollar. So the two scenarios for me is, number one, looking at this daily chart, possibly we are getting that price acceptance above this area. Okay, that's number one. We're obviously, we're getting some support here from this move to the upside. Again, we've got to remember our 70-30 rule, right? So markets trend 30% of the time, range or pullback 70% of the time. And we could be in this pullback where we're kind of correcting through time rather than through price. But for me, what I'm seeing is possibly are we happy being above this area before continuation to the upside? Right, that's scenario number one, where we could get a few more days, maybe a 20-period catch up. 20 period is curling over before movement up. Right, option number one is can we have analysis on gold? Yeah, I'll do that. Hi, I'll do that at the end. Is a good stop loss an area of supply and demand trading eventual overall wins? Is a good stop loss an area of supply and demand trading eventual? I don't really know what you mean, Windy Pine. I don't really understand the question. If you rephrase it, I can try and answer it. And option number two on this index, which is, from a 4-hour perspective, I would have expected this to push from this area. It's not done that, and we're kind of faltering a little bit here. So if we break below, it could be that Dow theory continuation of downward trend that we've been on, and markets move down and flip to a bit of a risk-off nature. Now, from a trading sense, I don't have any setups in the yen, dollar, or Swiss. But with the weakness we've had in the yen, with the dollar, I'll go into the dollar in a second, but that dollar pullback, there could be, if this happens, right, with this bullish bar here, it may not. But if this happens, there could be some opportunities there, counter trend, looking into the yen, looking into the dollar against those commodity currencies. But waiting for confirmation, because this is a bullish hammer on volume, we could see some push and maybe some range, maybe some rangy price action before the market decides what it wants to do. So as always with me, I always say it, let the market tell you. I don't want to say don't predict, but let the market to show you its hand and then go with that. When I feel comfortable with this SPX, if we get a break above, then I'll be looking certainly at again, those commodities against the risk off. That for me is what I'm waiting for. I'm happy with the positions I'm in. I'm happy to let EJ run. And, sometimes you don't need to take, sometimes a position is not taking a position.